Hey guys, Marty Boots here. Today I just want to make this educational video for you of a fantastic trading strategy. And I have made a PDF about this in the past and shared it in the Discord group. So some of you will know what the strategy is, but I don't think I've ever made a video really on it. But this video is just on the basics of understanding it. It's not about refining the entries. But I will make a video about that later. Before I get into it, I just want to thank Raz for his work on making the new introduction for our videos. I hope you guys like it. You can let me know in the comments what you think. Yeah, a big shout out to him and thanks for that. Anyway, I'll just get into it here. You can see the moving average here. This is the 200 weekly, sorry, we're on daily. This is the 200 daily moving average, not the EMA, just the MA. Now the thing is, when price gets above the moving average, God, it goes the whole way back there, but there is no touch the whole way down here. But when price gets above the moving average, the first touch is what we're looking for. Is the buy signal. That is the buy signal. The first touch is the higher probability trade. And the second touch and the third touch and so on, you'll see as we go through this, there, of course you can buy them and you can look to buying them, but it's the first touch. And price actually just retested here. Well, it broke out again. I mean, it came in, it's testing a level. You're going to wait for a rejection of the moving average to go higher. We got that little move higher, and you could buy as soon as price is moving above the moving average, or you could buy on this retest right here. And we all know what happened. Price moved up about 1,000%. But the strategy is, guys, the first touch, and you'll see this as I go through, and it can be used as longs or shorts. You can see we moved up 1,300%. This is this is back in what is this, 2013. Now the opposite is true for shorts. When price breaks the moving average, the 200 moving average, the first touch is your high probability setup short. So you can see we dropped 20% from the moving average here. We dropped about 20% lower, which is pretty good. I mean, if you traded that in leverage, you'd be delighted. You can see here, when price finally broke down, the first touch is a short. Look at that, perfect, almost flawless there. Rejection, and you can see it was a 60% drop from right here to right down to more than a 60%. I just done this very rough, guys. I just knocked this up very quick. But the 65% there if you really want to be good about it. But I just threw this together quickly just to show you. You can see here, as price is getting above the moving average, the first buy is the first retest, sorry, is a buy. Now that is a 10% move from memory. If you bought down here in the moving average, well, you can see here, it's a 9 to 10% move. Now it looks pretty small in comparison to the whole chart here, but at least you would have made some profit, or got stopped out at break even. So there was a potential for profits there. Now here we go again. Price broke out above the moving average. Now you have to look for the first test. Now you could have front ran the test. See right here, this is a test. Oh fuck, I just moved the window, guys. Hopefully you can still see that. I dragged the video by mistake. It should, hopefully it's alright. Anyway, where were we? You can see here, this is a test. Now you can be buying here with a stop below the moving average. I'm sure that's a very small risk. I think there it's only 1% risk or something, So that is a test. You can buy on that. But if you didn't buy on that, the first test was way up here. Sorry guys, this chart, my computer's running a wee bit slow here for some reason. Price moved way higher. There was a 200% move from the break above this moving average, a 200% move. We dropped about 50% of that, and then we got our first test. Now, we do not want to wait until price, in current day's price in Bitcoin, we are breaking above moving averages, but we do not want to be waiting for a 100% move higher for a retest. We need to be buying closer to the moving average to lower our risk, and we don't want to be left behind. So I'll get to that now shortly. So this test was a buy. It's the first test, but you can see here there's a buy here, a buy here, and a buy here, but it's not the high probability setup. You can see in the trend, the first test gets you in early, gets you in way early in the trend, and gets you creates more profits. So it's important, guys, that the very first touch is the most important thing. Now here I'm moving on to a 3-day chart, and you can see as you go up in time frames, you do not get many signals. The signals become less and less and less and less as you go down on time frames, or as you go up in time frames. Sorry. You can see here we touched here. Now you could have front ran that and looked for a buy and got a bounce, but it didn't actually give a clear signal. Now, when price finally broke down below the moving average and rejected, you could be looking to short this, and you can see price roll over. That's a 60% drop or whatever that is. Price broke out above the moving average, and look at the test. The first touch, guys, it's flawless, and that would have got you in. You would never have been in a loss on this trade. Never been in a loss. You've been in profit the whole time, and obviously profit would have just kept coming and coming and coming. So the first touch, guys, after the break of the moving average is the most important. Now here's a very interesting fact. It's not fact yet, actually. The breakdown, the first touch of the moving average is your short. Now we did get a signal to short on that red doji looking candle, this candle here, so you could have shorted right on that and see if it would have dropped away. It did drop a little bit. I think that was a 10 or 11% drop from memory. Oh, I forget now, don't quote me on the percentage, but is this going to be a short from here? I mean, the strategy says yes, you should try and short this for a drop back down. That is what the 3-day moving average is saying right now. After a major break, the first retest is usually a short. So that's what telling me. I was a bit bullish for another move to the upside, but the moving average strategy says, you know, we should be short there. So we'll have to see how that plays out. Now we're on the weekly chart. You can see here on the weekly chart, this is a strange one because we were always below the weekly moving average, so we didn't actually break above it to give a true signal. But the first touch coming back was a buy, and if you would have bought that, you know, it was the very bottom of the bear market. So you could have, it came below, you could have waited till it went back up and came back down and bought if you wanted to do that. It's not as clear because price has always been above the moving average there, except for this pierce. But I would say this is the buy right there. Sometimes hard to distinguish, especially in a situation like that. But it's clear it came into the moving average and held. Okay, here is the only other signal we got. The weekly chart, the first touch of the weekly chart was a sell. That was it. So the first touch was a sell, and that, I forget now how much profit that made, but it definitely did. You know, it's a 20% drop, so it was a good signal again. So the signals are usually always fairly reliable, guys. Now here is the 4-hour chart, and this is the last time frame I'll go through. So just to show you can use this on any time frame. Now, price broke above all moving averages here, and the first test it didn't quite hit it though, but it was very, very close. But it came into the moving average, and you can see price moved higher. Um, I don't know why this is here. That shouldn't be there unless I done something else. Anyway, this is your first touch of the moving average, and it is a short. So the first touch of the moving average after breaking below is a short. So if you short that, I'm going to stop doing these percentage moves because it's taking up too much time. But anyway, it is an 8% drop. You know, you could make money off that. Now, the first time you break above the moving average, the first touch is a long. You go long, and you can see what happened. So price spike below. Spike belows are not usually, you don't usually consider them. You need to see a break, a clean break of the moving average. So you can see here, well, price did go below it, but and then it came back up and it got below it again. But when we got above all moving averages, sorry guys, I completely messed this up. I don't know, this square is there. Yeah, I know now. The square is there because price broke above, but this was more of a consolidation, but it was a retest. But if you didn't count that retest, this was the first retest, and then price moved higher. I got mixed up there on that because of this. Anyway, so you can see here, price broke down, and this is not. You can see here the first test is a sell. You can see broke down. The first test is a sell, so you short here and you make money going down. When price broke above the moving averages, the first touch is a buy and you made money going higher. Now price did come back into the level, but that was more of a retest of the level. If you still managed to hold through that, I mean, look where price went, it skyrocketed. So you know, this was your buy area, and there was a fake out stop, but it was still the lows, and we went a lot higher. Price broke down and then broke above well, not all moving averages, but broke above the 200 moving average. And the first test you can see is a buy, touched it here, spiked right into it, stop hunted, and price went higher. See, these spikes and wicks, it's not a break really of the moving average, so you don't count that. Now price broke down below the moving averages. When they broke back up, the first touch is a buy. So you buy right here on this moving average and let it run, let it ride, and you can see what happened. Beautiful. Price broke down below moving averages. When it broke back above, the first touch is a buy, and you can see what happened. It moved higher. Now, I'm doing this basically on the whole history of Bitcoin here. We're getting through it, but you can see it gives a lot of good signals. Now these are not the first touches, so they're all irrelevant. They don't count. So it's just the first touch when you break above, or the first touch when you break below like this. Look at it; it came right into the moving average, and you short, and you could have made money on it. Now here's a crazy wick. I don't know what's going on with this wick. That's insane because that's showing that it opened down here and jumped higher. I don't know what's going on there. But anyway, we'll look at it. When price broke above all moving averages, this was the first test of the moving average. But I don't know what's going on there. It opened up down here and moved higher. So that's it's a dodgy pattern. But if you see price getting back above the moving average, you can go long with a stop below the moving average. Again, it's just a spike lower, spikes no good, no good. But when the price finally broke below, you know, you could have actually shorted this, but because it's a V-shaped pattern, when you look at the price action, you would probably know this is going to go higher. V-shaped patterns are usually a sign of strength. So price broke above and it can pull back into the moving average. The first touch was a buy. You can see there it was a buy and it would have made you money. Now price broke below. It was a V-shaped pattern again, so you would be concerned that this is potentially going higher. So, but it did touch the moving average. If you shorted, you could have potentially made some money on that. We're at the 4,000 level, so that's it's a decent drop there, guys. Look at this, it's a 23% drop. I know because of the time frame it doesn't look so much, but it's a 25% drop, huge drop. So anyway, when price broke above the moving averages, this is considered a touch. Well, it's not a true touch, but you could have front run it and bought here, and you would have made a lot of money. Of course, price went substantially higher. This maybe a touch as well, but it didn't touch. But you can see you're above the moving averages, and it's bullish action. This was the first true touch. You can see here at 7,000. Oh, what's that? 6,000. You can see this was the first true touch, so that's a buy, and it went higher. So it went to 20,000, so you made 300% on your money again. So here, price it spiked lower, so it didn't really. It's not considered because of the huge drop and then a spike. The likelihood of the bounce going back above the moving average is probably going to happen. Now, if price here, you might have started to consider having a short. So that if you did, I mean, you could have shorted here on this touch and the drop, but your stop would have been a break even here. So that would have been a break even trade most likely. Price came back below. Now here you could have, price broke below. When you came back up and tested here, you would short this, and I haven't it marked, but you would short this on the first touch, and well, we all know what happened. Bitcoin crashed lower. I'm not sure why this is here. Blah, 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 blah. Why is this here? Okay, maybe it's for this. When you broke above all, when you broke above all moving averages, the first touch here, you could have bought that. So that buy did bounce and you could have made money. Let me very quickly, what are we talking here? So yeah, guys, it's a 10 to 15% bounce. So it looks pretty small on the chart. Maybe I'll just zoom in, but it looks pretty small on the chart, but it's quite a lot. Then when you broke below, you could have attempted to short here, and that's probably a 10% drop. When you broke above moving averages, again, the first touch, you could have bought that, and again, you can see that's a 10 to 15% bounce. So the strategy works, guys. I mean, if you've looked through the whole history of Bitcoin, I'm not saying it was 100%, but it's pretty damn close. When price breaks, it's the first touch after a break of the moving average, guys. So important. Here we go again. Price broke above the moving average. The first touch, obviously, it made money. Here we go. Price broke below the moving average. The first touch is a short. Again, you made money. It's quite unbelievable. Now here, I think, guys, is the first time it failed. I think. I mean, unless I'm forgetting one, but if you look at this, price got into the moving average, and you would be looking for a buy. Price, I think I actually lost money on this trade back in August. I think I took this trade, I think, and I lost money on it. I remember it. It blew through it. I got stopped out. But anyway, you can see here the first touch of the moving average on a retest, it failed. I think that's the first failure rate. And how many trades have we gone through so far? 50? I don't know, was it 50 or not? But that's probably the first failure rate. Again, price broke above the moving average, the 200 moving average. It touched, and you would have made money. You had the potential to make money. And that is a decent move as well from memory. 10% move. Okay. So now price is getting a little bit choppy. So this is choppy. So here we go. In this real choppy action, that could have been considered a break. you probably would have lost money on that. You know, there's another one. So in this real choppy environment, I mean, Jesus, I mean, everybody remembers how bad this environment was to trade. It was just horrible. So I'm just going to skip over that, not to discredit this strategy, but you know, you can see if it retested, you know, it just nothing was working here. That was sideways chopping shit. So I'm not even going to go over that. But of course, there's periods in markets where things are not going to work, but it's using a strategy over a length of time that proves if it's a worthy strategy. And you know, I think I've proven it's a worthy strategy from the whole history of Bitcoin. This is a 20-minute video, and I'm taking longer than I thought. So I'll just speed it up a bit. You can see here it spiked higher, spiked higher. They're not true breaks of the pattern. This could have been considered, but in the day when, if you're waiting for this to retest, I remember this dropped in the space of 1 minute. This just fucking, pardon my French, but just crashed lower in about 1 to 2 minutes from memory. So you wouldn't have been able to get that anyway. That was just manipulation or whatever that was. Well, it was a bit of distribution here and whatever. So here is the last signal. I nearly remember from memory. This is the last signal that we've got, and we broke above moving averages on the 4-hour chart. Broke above the 200 moving average on the 4-hour chart. The first touch is right here. You buy this right here and have a decent stop. We all know what happened. Price is up 30% or whatever. 30%. What am I saying? 50, 60%. So there you go, guys. It's a very good strategy, and it's a very simple strategy, and it's good for a novice to try and get their head around. There is ways you can use price action, different indicators to refine your entry, but it just shows if you have a decent stop on it and buy on the first retest, guys, over time this strategy makes you money. And if you traded this strategy in the history of Bitcoin from the inception of Bitcoin the whole way through, well, you'd be a multi-millionaire, even if you started with a small amount of money. So, of course, your trade management helps, because sometimes you need to hold it. This is, I've done all this on larger time frames, so it is more of a swing trading strategy on this. You can do this on a 10-minute chart, which I'm not going to go into now, but it's the exact same, and you can use it as a scalping strategy, and it works just as good. It's fantastic. So, I mean, the success rate there in the whole history of Bitcoin was up there. I'm just going to say, well, it's 80 to 90% roughly there. There was a couple of failures. This was a failure, but you wouldn't have got in. There was a couple of failures up here in that shitty chop. But it's a very high success rate strategy, guys. So I hope you all take the time to learn it and kind of master it and get it into your subconscious mind that when the first break above the 200 moving average is a buy and a sell for look at this. We broke below. I didn't even point this out. The first touch into the moving average, what happened? It sold off. There you go. I didn't even see that. Again, here we broke below the moving average. The first touch was a sell. Just to show. I didn't even notice them in the moment there, but there you go. So anyway, guys, I hope you liked the video, and please give the video a thumbs up if you enjoyed the content. And I would urge you all to give it a thumbs up or a thumbs down if you'd like, because YouTube likes interaction, and I would really, really, really appreciate it if you just give it a thumbs up or a thumbs down or a comment. That would be absolutely wonderful, guys. So thanks for that. And if anybody would like to join our Discord group, we have a group of wonderful, intelligent traders and investors in there. And if you'd like to join that, please send us a message in the link below. It's on our Facebook page, and we can give you a 2-day free trial for that. Anyway, guys, thanks for watching. This video has gone way over, but it's a very important content and it's a fantastic strategy that can change your trading career and actually change your trading life. But you can make off one successful good strategy, you can make a living off. So just think about that when you're trying to study this. Anyway, guys, thanks for watching and have a good day.